Good afternoon. It's 12:24 Pacific Standard Time, 2013, and we're in the last hour of a Friday options expiration. And Google is up $3.23. These put options were 6.34. They got a $5 range. And what we're going to do is take a look at the Google chart, which is a sideways movement in a 3-minute level in price. Basically, we can all see right here that in this video, this is that diamond resistance. This is where we're at right now. This is a level 2, 789 right over here. I'm showing this to the MMTs as the wholesale entry trading the last 30-minute period of an $800 put, with that being the Friday option strike price, and it's less than $1 up from the ask here in the money. Our bids are down there at 75 cents. This particular resistance level is in this 3-minute price bar. As that goes up, the bids will drop. Once again, how do I make a market in the option pit on a Friday 30-minute expiration Friday based on resistance in the equity and the markdown to wholesale entry here?
You stand at this $1.10?
We will stay at the $1.10 level on 3 based on that wall of resistance right now. So we can see that the bid's $1.30 by $1.35, and this is here happening now. $1.15, there's the $1.10. He does pop the diamond up above the teeny line, above the previous diamond here. So basically, that's where that $1.10 bid comes into play. Right now, live. Right now, 26 minutes after the hour. That means there's 34 minutes left to the closing bell. That means that this is an $800 put at the strike. It's $1 in the strike. They have taken the premium down here to these very wholesale levels based on the mathematical. It's 89 cents per line, and he's at the top, and we want to see that wick come there. Here you can see in the live video. Let me put it here. See here, this has got to stay below 75, and this is at 24. When this ticks down, we want to see where these diamond reversals happen right there at that teeny line. How much is it? 89 cents per line. That's how accurate it is. We'll enjoy having you here. Once again, based on the fact that they have marked these down to that $1.20 area, $1.15 by $1.40 is the spread. On a Friday, weekly Friday expiration, right into the closing bell. Right now, there happens to be 33 minutes left. Based on $1.15 by $1.40 here and now, you can see the red bar. You can see here clearly that down here, let's move this up here. Let's move this out of the way. So here's the calls, are the puts, 800 put, and here's Google right here. There it is. And so basically, they're going to take more premium out to the lower end of this bid and ask range. And we got to make sure that Google meets a requirement. And what is the requirement? The requirement is the following: that you have to have a red bar, which it's doing, in order for that $1.20 by $1.40 to hold that bid and ask range. One of the things about the resistance level is 800 is going to be right below 800. He can go up to 799.75 here and drop these contracts lower, but they haven't seen $1.10 yet, but get down into that $75, 75 penny range. But what are we always looking for? We're always looking for this resistance to hold between the algorithms that are involved in the buy and sell, called high frequency. high frequency technology that's used in buy and sell scripts. They're program scripts. They're mathematical. And we can see here at that particular line that we're at 24 here, and we can see $1.15 and $1.35 over here at that $800 put. Now remember, 800 has to be the wall of resistance. And this markdown that we're trying to get, somebody keeps sneaking in there and buying them. Their $1.25s just went off. Look at that. Whole slew of them. We're down here at $1.10, but they're $1.30. Somebody's got to be willing to sell. So somebody stepped in there to buy those $1.20, $1.25. They stepped ahead of our order. Our order here is $1.10. And here is what Google is doing, and this is live in the market. It's beautiful. The beautiful thing about it is in this pit, a put option is that when it reverses and goes back down, that $800 strike price for this side of the market would go up in value, but we still need a closing bar below here and a red bar, and each red bar turned back to green bar. So we do not have a qualifier yet. The qualifier is that you got hit on one. All right, so there's one. We're the low of the day. $1.10 by $1.45. But we only got one at that price level. And that's based on it. And we'll get the other ones. He'll throw it. But we're making people, see, we got the 10s right here. So that is the low of the day at 12:30, which is 3:30 Eastern time. And we got them to throw over to us on the bid. Now the bid is $1.20, and we have to have a red bar just like that. And this is live entries. We are the low. Yes. So you have to have a red bar going straight down. And the red bar has to be greater than these last three bars. And we're starting to see where the IR is 65. We're starting to see where the bids are dropping. We're starting to see that when we entered the order, at least we were getting hit over here on the bid. And you buy 3 contracts, that's 30 cents. That's $90. Still, it's $90. And it's $1.10 by $1.35. And here is that resistance level. It has to stay there. The red bars have got, look at the body has to be greater, and they have to sell these bids down, and they're not doing that right now. Why is that? Because this is at 24 on the current TR. That's our market maker readings, and he's trying to push it up there, and $1.10 by $1.30. With a double diamond and that teeny line, we don't have a red bar. We have to get that red bar. They got to sell this side of the market. If they don't, limit out at $1.20. Limit out at $1.20. Limit out at $1.20. Limit out even money, which is 10 cents above your even money. Limit out at $1.20. Limit out at $1.20. Here we are right now, $1.10 by $1.40 in the bid and ask, and there's that red bar coming into play. But each time it gets up here, as I say, the body, the sell-through body, the selling the bid down is what takes these values higher. I'm still going to maintain that 75-cent bid. 1234. Here it is, 115 by 140, 800 put, weekly, Friday, expiration. How do I buy wholesale and get in and out between the bid and the ask, which you don't know how to do, but we will let our market makers train you. Here we go. We hit our price target live. Right now the time is 12:39. There's 21 minutes to the closing bell on this weekly option on Google. It's an $800 put. Google has to stay below 800, but look what happened here. They popped it up and they popped it right down to the low. Exactly what I said in this video. And if that's not going to convince you, nothing will, because you can't find it that accurate. Now, I'm taking it down to 35 pennies. Why am I doing that? Because this continues to break higher at the 75 IR, and a 0.27 is going up in value. That's why these came down to 75 cents. It is now an $800 put that expires There's another red bar. That is the low of the day. That just happened within the last couple of minutes. It's in the live video here. Let the truth be known at 75 cents. How do I make a market? I marked them down to 35 cents because our platform says that we're at the low going into the close. This is very close to $800. This is an $800 put. Now there's another strike price that can be traded called a $795 or $805 put, which is at its lows going into the last 20 minutes. So 35 cents on the 800, 35 pennies limit in. Once again, as it breaks higher, the ratio is at 28. It's above 75, and we're going up another 89 cents per 1/16th value in the market maker system. That is the penny increment, 89 cents each one of these lines. So he got one, and he's working on two. Okay, and he's right below $800, and these are 50 pennies, and these are by 75 cents, so 25. Look at how wide they are. Now, I'm a market maker here at 35 pennies based on the fact that this will not close above 800 in the next 17 minutes to the closing bell. Here we go, guys. 35 pennies is a low, and we have exactly 16 minutes to the closing bell. And we're breaking right up here toward the $800 put price going into the weekly option expiration. And 35 cents is the low. Remember, we canceled the 75 cents. I'm right on the money. It's right here in this video. We are market makers. And in this pit, you do what the market maker tells you. It does all the work for you. Does all the work for you. And we know it. There's nothing to be afraid of. Get in here, make markets, use the trading capital we provide you. Right below 800, it's live, it's here, it's now, it's 35 pennies on the low, and we have exactly 15 minutes to the close. Here we go now, right into the close, 35 by 50. I've marked it down to 15 pennies. Yes, I have. He's right there at the wall of resistance, right here at that teeny line, that 1/16, that's 89 cents up there. He's right below the $800 area. This is an $800 weekly put, 222, and how we make markets with these right down to the closing bell. And I've taken it down to 15 cents. I've hit it right to the penny. He's right there, but we do not have that reversal bar that we're looking for. You have to have the red bar. We never did get it yet. And we had to mark it down. That's what the market maker did to the wholesale price. And the time is, there's 14 minutes to the closing bell, and they're 40 by 50. And here we go, 40 by 50, 40 by 50 off of that 35 penny low, 40 by 50. And we have to have a reversal bar. We're getting a reversal bar. When you get the red bar, you can see what will happen with these prices. They'll zip up real quick. But not until you get a red bar all the way down, 2 teenies, is where these would go back to $1.50. We do not. Now we're getting a little bit of a red bar here. And it's 12:46 p.m. Pacific Standard Time. We're 13 and a half minutes into this options Friday expiration of the $800 put based on Google having the wall of resistance right below 800 and then reversing coming into the closing bell to take these values at 35 pennies to all-time highs. One of the problems that we have is that every reversal bar has not been confirmed. We did mark them down for the later part of the last 5 minutes for people that are market makers at 15 cents. Why is that? Because he's printing 800 now. He's printing the 800 put strike price. We got to have a confirmation bar, and we haven't gotten one yet going into the close of a Friday expiration. How do I buy wholesale? And then when they go down in value, then these go up in value. But we're right at the strike. Therefore, the risk remains high. Here we go, right down to the closing bell. They got to 16 cents. They're 20 by 45. They came down to our 15-cent bid, and we are exactly 2 minutes to the closing bell, and it's below 800. And there is the reversal. When we got 16 cents on the contract, they're 50 cents on the bid, and they're printing 50 cents right now, and 40 cents. So that's the extreme level of trading a weekly options strike price on Google on 800 put, with the stock below 800 here, and now they're 10 by 60 cents. So as we go into the final close in 1 minute, people will buy and sell right down. There's the spread. 10 cents is the low, and he's printing right below the strike price on this closing bell, 10 by 60 cents, and it's good for you to see it. And he's printing right there going into the weekly expiration close of the week. 10 cents by 55 cents. Look at that. Someone got out up here at 40 cents. It's 10, 25 by 60. Let's take a look at the last print. There's that closing bell. There's that dollar off on the ask. And the last print, 25 cents. And there is Google closing at 799.71 cents, slightly below the $800 price. That is the final closing bell. That is the final closing bell of 25 cents here. You can see that they did get 10 cents by a dollar. So a lot of people will buy them right into the close. You just never know, but you do get paid big. That is the conclusion of the price live in the market, trading a weekly 222 $800 put into the closing bell with the last print on Google of 799.71.